8%. Wheat is also on the positive with $607 per ton, and it's positive for 0.50 positive, and the positive here also 0.08%. But for cocoa, it's $10,400, and it's on the negative. It's on the negative, down 0.87%. Cotton is also positive 0.18%. We have feelers from Abuja. The governor of the Central Bank of Nigeria, Mr. Olayemi Cardoso, is ready to reel out the outcome of the two-day meeting of the MPC. Let's listen to him. We'll get to our discussion after this.
Policy Committee noted with satisfaction recent macroeconomic developments which are expected to positively impact price dynamics in the near to medium term. These include the stability in the foreign exchange market with the resultant appreciation of the exchange rate and the gradual moderation in the price of PMS. Members, however, were not oblivious to the risk of persisting inflationary pressures, driven largely by food prices. The committee noted the recent rebasing of the Consumer Price Index, CPI, by the National Bureau of Statistics, NBS, which reviewed the weights of items in the consumption basket to reflect current consumption patterns. The committee further noted that as the federal government continues to improve security in food-producing communities, supported by other measures to enhance food supply, food prices are expected to continue to moderate. Members reiterated the benefits of increased collaboration between the monetary and fiscal authorities demonstrated at the recently concluded Monetary Policy Forum organized by the bank. The MPC thus urged the continuing strengthening of this collaboration to achieve the mutually beneficial objectives of price stability and sustainable growth. The committee highlighted the benefits of the improvements in the external sector to exchange rate stability, including the convergence of rates between the Nigeria foreign exchange market and the Bureau de Change, and urged the bank to not to relent in its effort to boost market liquidity. In this regard, the committee acknowledged recent measures introduced by the bank, such as the Electronic Foreign Exchange Matching System, BMatch, and the Nigerian Foreign Exchange Code to foster transparency, ethics, and credibility in the market. The MPC is thus of the view that following major policy measures undertaken by the monetary and fiscal authorities, the flow of foreign direct and portfolio investments as well as diaspora remittances are expected to increase as investor and stakeholder confidence improves. Furthermore, the improvement in oil production, which was 1.54 million barrels per day at the end of 2025, at the end of January 2025, will enhance the current account position of the balance of payments with the attendant positive impact on external reserves. The MPC observed that despite pockets of macroeconomic headwinds confronting the Nigerian economy, the banking system has remained robust and resilient. Members, however, urged the bank not to relent on its keen surveillance of the banking system, especially at a time of significant exogenous and endogenous headwinds. In addition, members called on the management of the bank to closely monitor the ongoing recapitalization of the banking system to ensure the injection of quality capital as envisaged in the framework. Overall, the MPC acknowledged the various policies by the bank aimed at anchoring inflation expectations, easing exchange rate pressures, deepening financial inclusion, and improving the transmission mechanism of monetary policy. Data from the National Bureau of Statistics using the 2009 base year showed that headline inflation year-on-year stood at 34.80% in December 2024, compared with 34.60% in November 2024. On a month-on-month basis, it moderated to 2.66% in December 2024 from 2.98% in the previous month. Both the food and core components remained key contributors to headline inflation. Food inflation eased slightly to 39.84% in December 2024 from 39.93% in November, while the core component stood at 29.28% in December 2024, compared with 28.75% in November. Following the rebasing exercise and revision of the weights of the consumption basket using a 2024 base year, headline inflation for January 2025 now stands at 24.48% year-on-year, while the food and core components stood at 26.08 and 22.59% respectively. In the view of members, the new base year and reconstituted consumption basket represents the current economic realities. Real GDP year-on-year grew by 3.46% in the third quarter of 2024, compared with 3.19 and 2.54% in the preceding and corresponding periods, respectively. Both the oil and non-oil sectors contributed to the growth, with the services sector being the main driver. While the non-oil sector is expected to continue to lead output growth in the near term, sustaining the increase in oil production will enhance the contribution of the oil sector to GDP growth. The external reserves remained robust at 39.4 billion US as of 14th of February 2025, translating to an import cover of 9.6 months for goods and services. In addition to this, the balance of payments has remained strong with a positive current account balance of $6.06 billion as at the end of the third quarter of 2024. On the global scene, the war between Russia and Ukraine, as well as the uneasy calm in the Middle East, remains. The adoption of increased tariffs by the new U.S. administration against its trading partners and retaliatory tariffs may result in elevated inflation and tempered growth in 2025. The IMF has, however, maintained global growth projections for 2025 and 2026 at 3.3% apiece. Members thus agreed unanimously to continue to monitor both domestic and global developments to identify emerging risks and propose appropriate policy responses to mitigate the impact of associated shocks to the Nigerian economy. The next meeting of the committee is scheduled to hold on the 19th and 20th of May 2025. Thank you.
Thank you very much, Mr. Governor. That was communique number 156 and the first for the year 2025, presented by the chairman of the MPC and governor of the Central Bank of Nigeria, Mr. Olayemi Kadoso. We will now take questions from members of the press. Please state your name, your medium, and then you ask your question. Thank you.
Good afternoon, everyone. My name is Musa from the NTA. Well, my question is, with the phasing exercise over now by the National Bureau of Statistics and all structural changes accounted for, what should we expect from the Central Bank of Nigeria going forward?
Thank you very much, Musa. Well, let me just say that as far as the Central Bank is concerned, as always, we are data-driven, and that will continue. We will, continuously look at data, and our decision matrices will be focused accordingly. Of course, what we have is a CPI which is more reflective of reality of consumption patterns, and that's a good thing. For example, the previous one that we had actually took account of black and white televisions, for example, which we all know is no longer relevant. So to that extent, really one commends the efforts of the NBS in bringing the numbers to greater reality.
Good afternoon, Mr. Governor, sir, Deputy Governors and members of the MPC. My name is Sarah Chimobu. The Central Bank recently launched the Nigeria Foreign Exchange Code. Would like to know what are some of the gains that have been contributed to the nation's market stability as well as liquidity.
Sure. Thank you. Thank you. That's a good question. I think the first place to start is to not look at the FX code in isolation. If you recall, the administration has been on the path of ensuring that we have a foreign exchange market that is deep and is open and transparent and easy entry and easy exit. And there have been a series of measures which have been taken from the outset including, of course, wiping out the multiple exchange windows, which, quite frankly, if you recall, have cost the federal government, have cost this country an enormous amount of money. I mean, there we are in the past talking about the losses from the subsidy on PMS of about between 2 and 3% of GDP, while the actual losses from foreign exchange, multiple windows and subsidies, if you like, is even more than that. So our ability to close those gaps and ensure that we have a system that is more open, more transparent, our ability to take on the whole issue of diaspora remittances and IMTOs at some point in time, and I know I addressed this in the past to the press, where we actually had taken the view that there was need to aggressively improve the inflow of IMTO remittances and diaspora remittances, and we know the progress we have made on that. So going on with that, we of course brought into play the B-matching system, whereby there's more open transparency with respect to buying and selling of foreign exchange. And we've seen again, the window or the differential in rates between the BDCs and the official rate has come down to really, quite, I think as at last count, maybe less than 1%. Now, this is the FX code is one in a number of measures. And that's why I say I don't want you to see it in isolation. It is one in a number of measures, which basically, importantly, have brought all the different key stakeholders together to agree on the basis for which foreign exchange markets will be transacted. And at that particular forum where this signing was done, I just want to remind people that we had a lot of commitment from the banks, because they are major players in that industry. The chairmen of the banks, the CEOs, and the chief compliance officers were invited to that forum. And we also at the bank were present, and we all signed up to this international code, which basically covers ethics and the way of doing business and the consequences for not doing things the proper way. And it's also important and instructive that after that, the banking community retired to their respective places of work and were to have a board meeting and to consider what had been signed up to, and to ensure that they all understand what the road of travel is going forward. I think that clearly, in my view, has sent the right signal to the market and has brought about greater transparency and greater accountability, which is what it should be, or which is what it should have been in the past. So we have merely taken our market back to what it used to be. That's the whole objective. And when I say what it used to be, that may have been many years ago, but at one point in time, it was in that, it operated in that manner. And we want to take it back to that and ensure that those who operate in that system are held to account and are carrying out the activities in a transparent manner. To answer your question in short, the outcome has been very positive. The rates have moderated, which is not surprising, and the differential between the official and the black market has also come down to a very, very insignificant amount.
Governor, members of the MPC. My name is Sunday Michael Obu, and I write for the Interest newspaper. Mr. Governor, I'm sure you have tracked some of the concerns that have been raised by manufacturers with regards to inventories, and so my question will be, how does the Apex Bank intend to strike a balance between controlling inflation and sustaining economic growth, especially in the face of elevated borrowing costs and high investments?
Sure. Very good question. Thank you, Sunday. Of course, this is a question that one gets asked a lot of times, and it's not surprising because obviously there are trade-offs. There are trade-offs. But what I will say, quite frankly, is that the measures we have taken so far in terms of orthodox monetary policies, we can see have begun to yield fruit. They have begun to yield fruit. We can see that attrition to reserves have been consistent, and at one point in time, may I remind everybody that we achieved the highest level of reserves in the past 3 years at one point in time. We've also continued to see inflation gradually beginning to decelerate. We can see that there's greater confidence in our markets, and that was something that was missing when we started this journey. And we can see that confidence is gradually returning to our markets, which shows that we are on the right course. Now, obviously, as that happens, we are in a better position to begin the process of moderating rates, because stability is very, very important. And if investors do not see stability, they do not come to those markets. So our own objectives have been and will continue to be to achieve stability in the exchange and in the foreign exchange markets and in the financial markets. That's our objective. And as long as that happens, we are confident that we will begin to see more investments coming in, which should spur the badly needed growth. One other thing I will add to that is the fact that as at now, our currency is a lot more competitive. And with that competitiveness, we've seen an increasing interest from the international investors to want to come and invest in the country's future.
Governor, good afternoon. My name is Isa from Retail. Reform started by CBN to the active costing of inflation. We have seen this will be carried out. Going forward with this implementation, where do you hope to see the inflation by the end of the year?
Well, it's a good question. And my answer to that is to say again, we will continue with the orthodox monetary policies that we have embarked upon. We have seen the outcome, and it's in a positive direction, and we will stay that course. We will certainly stay that course. We will be vigilant. We will not take anything for granted. We believe that inflation has been too high for too long. It has been too high for too long. So our objectives in the short to medium term is to ensure, actually, I beg your pardon, in the medium to long term, is to ensure that we are able to bring this down from the double digit to the single digit.
Good afternoon, Mr. Governor. My name is Indo Kache, Information Newspaper. There was a recent change in ATM withdrawals announced by the CBN, and there are concerns that this might impact the decision of people living in rural areas and underserved areas and going through the banking processes, thus affecting the financial inclusion agenda of the CBN. How does the CBN intend to ensure that this decision does not impact negatively on the financial inclusion agenda? How do you bring in people living in rural and underserved areas? Thank you very much.
Thank you. Thank you, Nduka. Well, I know that on the surface, it may appear another challenge to what people may perceive as increasing tariffs, increasing costs around various segments of our economy. But the truth of the matter is, this is not in that category, and let me explain why. And actually, let me even give you a little bit of background. This actually came as a result of some of the efforts that we deployed at the time where there was shortage of currency, especially towards the Christmas period, and where we felt that people were going through undue hardship. We were meeting on a regular basis, and when I say on a regular basis, I chaired a committee that met every single day to come up with solutions that will ensure short, medium, and long-term solutions to these problems. Now, clearly, the banks are interested and need to be incentivized to ensure that there's regular access for their ATMs, that people can come in, take money, and go out. And I think the situation has improved a lot. But a lot is not enough. A lot is not enough. It has to work perfectly and seamlessly. And if we are planning for the future, there are certain costs that do need to be absorbed. And this is one of them. Okay, so my view is that it isn't something that is going to dissuade people from having access in a seamless manner to their money. On the contrary, it should encourage and it should put the banks on greater scrutiny, especially where payments are being made for withdrawals. Okay. But the good news is that if you are withdrawing from your own bank, it's not going to cost you anything. If you go to another bank where you go on a regular basis and you feel this is where you want to be.
Doubt and fear doesn't occur at the canvas, it shows in the canvas. It shows the conation of raw.
Something that is very, very much open, and we believe that with this new measure, it will encourage a greater proliferation of ATMs and will make the access to money more seamless. And indeed will discourage those who have taken advantage of a gap and are charging exorbitant prices to disperse money to people. It will literally shut that particular area out of business over a period of time.
Governor, sir, Deputy Governors, members of the MPC, good afternoon. I'm Nancy Nachi. I'm Common Nancy. Governor, sir, my question is around fiscal and monetary policy coordination. In light of the latest development that we just have, given the MPC's recent CPI rebasing, which has adjusted inflation to 24.8% for January, alongside, and I must say this, alongside the cost push inflation dynamics that we have in the country, and the President's 15% target for this year. Colleague asked you earlier, what is the target for this year from the bank? So how does the CBN plan to strengthen coordination with fiscal authorities for us to have a unified inflation management strategy? Additionally, I must add this because I know that those of you at the Central Bank will be watching the potential impact of Trump's tariff impact on imported inflation. And the MBS brought out special indices which imported index is part of it. So are there new and most especially concrete policy frameworks under consideration in tackling inflation this year? Thank you very
Thank you very much. Well, with respect to, I mean, those were several questions in one. It's okay. It's all right. With respect to the rebase CPI number, just for clarity, nobody should infer that inflation has fallen to that level. No, because you are really comparing apples and oranges. So I think that should be very clear. That this is there's still need to get other figures going forward to be able to make the comparisons that you may be referring to. But needless to say, we, as I said earlier, we have gotten the data. We are analyzing the data, and in due course we will, give more guidance as to how we see the future. Don't forget, we are consumers of data. We are not involved in the production of the data. So we've received it, and we are analyzing it accordingly. And in due course, we will respond accordingly. But suffice to say, though, as we continue with the policies that we have embarked upon, we believe that the road of travel will be in that direction. Now, with respect to the coordination, which is a very, very important question, particularly at this time. And it's something we talk about many times, but I cannot overemphasize how important it is this time round, because it is coordination that will ensure that the gains that we have made in the various markets not only hold, but continue to improve. I will be deceiving you to say the fiscal will do it on its own, the monetary will do it on its own. It won't be. The coordination we've always known has been important, but at no time can it be as important, in my view, as the situation we have now. Because we are in a period where we can see change in a positive direction. And we need to not only maintain, hold, but improve it. Now, to reassure you, the recent monetary policy forum that we had, which was designed to look at a number of the things that all of you have asked today, that the press have asked about. We had not only the organized private sector present, we had the BDCs, we had multiple stakeholders there. But in addition to that, we also had very strong representation from the fiscal side, including the Minister of Finance coordinating Minister of the Economy. We had the Minister of Budget and Planning was present. We had the Minister of Trade and Industry was present. Minister of State Finance was present. The Senate was also, very, 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 very highly present. We also had the PAMSEC, who is also a member of the MPC, who was also present. In addition, the chairman of the state, the Governors Forum, I beg your pardon, the Governors Forum, because that's a very important body. That's a very important body. And they were also present. And of course, myself and all the deputy governors were present. Okay, and we spent hours in dialogue. We spent hours in dialogue. And two things that I would say have come out from this. A number of different things, granular. But two things I will say. One is a commitment to increase the depth of the dialogue that we are going to be having with the fiscal side to increase the depth, so that obviously, like what we've done, we will expand it and go into many other areas that affect the economy. And then secondly, thank you.
All right there, yes, you've heard it live. It's official. The CBN Committee and Monetary Policy Committee unanimously in its decision has decided to hold